Let's give you our levels for this morning. Our pivot this morning is 39.65, 39.65. Support below at 57, 49, 41, 32, and 21. Resistance on the upside at 73, 80, 87, 4,000, and 07. Pivot 65, resistance 73, 80, 87, 4,000, and 07. Support below at 57, 49, 41, 32, and 21. And the market here, kind of narrow range overnight, pretty much, just kind of bouncing back and forth, trying to see where it wants to go. It reacted a little bit yesterday afternoon to some of the Fed speak. I think today we have the Fed speaker speaking, and he's going to be talking, as somebody said yesterday, at 12. Let's see. He is going to be, we got it here at 12:30 today. 12:30. So we had ADP come out this morning. They're expecting 200,000. Came out at 125, I think, is something. It was a very lower than expected number. As the market opens up here, so we'll see what that's going to bring. They turned over the financials. The financials now are trading in the March contract. So that's good because that means winter's almost over. That's how I look at it. When we have to go to December, that means summer's almost over. And now when we go to the March contract, that means winter's almost over. How my mind works. We had retail inventories come out this morning. A GDP number came out this morning. So those numbers, the GDP number, we're expecting 2.8, came out at 2.9. Last month was last quarter was 2.6, so they revised it up a little bit. So you had mixed numbers there. The GDP number a little bit better. Kind of doesn't really jive with what the bond market is doing. The bond market is kind of telling us we're going to be in some kind of recession, but the numbers are not playing out that way. So then we do have a whole slew of stuff today. At 8:45, so in about 13 minutes, 12 minutes or so, we've got Chicago PMI coming out. At 9 o'clock, we've got pending home sales coming out. At 11:30, we've got a Fed speak. 12:30, the Fed speaker. And at 1 o'clock, the beige book is coming out. That's a summary of all the Fed banks, their economic outlook from all the Fed banks. So that's coming out at 1 o'clock this afternoon. So slew of stuff coming out today. So right now we'll worry about and there's been a whole bunch of Fed speaks already. They're coming out already. So we'll see. So we got to deal with Chicago PMI at 8:45 in about 12 or 11 minutes, and then we'll deal with the pending home sales number at 9 o'clock. And then you have the Fed speaks at 11:30, and then 12:30 if we're gonna be hanging around that long. We'll see what happens. It's the market here kind of just very narrow ranges you can see overnight. Again, once we get into the month of December, which is tomorrow, you have to be definitely that VIX is trading around 22. We'll just hope it stays around 22. How's that? Again, but that could any geopolitical situation could erupt. Especially when you have the nut job in Russia and Xi there having to deal with disruption of his authoritarian rule that he has over the Chinese people, which is amazing, actually, if you really think about the vast number of people that are in China that he can have so much control over. But they do. But they're speaking out over this COVID, his restrictions, and we'll see. We'll see how that plays out if the young people there decide to continue to hit the streets or not, and if it disrupts the economy. But it did help. It has helped. I think they've made some of these restrictions that they had over there a little bit easier in some of these areas. So, yes, he's listening to the people, which is normally usually do. So we got to deal with this number here at Chicago PMI number here, coming out at 8:45, 9 minutes. Let's see here. You never know. We got geopolitical situations all over. We got the our bond market, which is really an inversion of the yield curve, is the most it's been in quite a long time. Almost to the point where the bond market is like you have to go into a recession. Just saying what the bond market's telling us. I don't know if it's going to happen or not. I'm just saying that the bond market usually is right, but maybe not. I don't know. So we'll stick with the bond market being usually right, like 90% of the time. So we'll see where that brings. I did see the other day that there's one good thing to all these rising rates is that there was a bank that was offering 4% CD, which I haven't seen in like 20 years. Last time I saw 4% CD. So that was interesting. But again, that's what usually should happen when you have rates going up as high as they are. So we got up to the 70 area there, bounced off a little bit, coming back down, getting a little bit, just range bound here. Little support there at the 57 area. Anybody have any questions, comments? Add it into the chat. That's where we would talk about it.